We think it's going to be an okay year. There's a lot of geopolitical risk and noise. There's a lot of political noise in the U.S., but beyond that, the economy is good. Inflation is breaking lower. The Fed has pivoted. We think they're going to be lowering rates. The market overall is at about 19 and a half times earnings, but if you X out the Magnificent Seven, it's about 16 or 17 times earnings. There are many areas of the market that are 13 to 14 times earnings. So we think it's going to be an okay market. We look at things that didn't do as well in 2023 to be the leaders in 2024.
And where does that leave your top preferences for the market in terms of how you'd be looking at asset allocation decisions right now?
So in terms of asset allocation decision, we are very comfortable being modestly overweighted to equities, but for the first time in a very long time, we do like bonds. But we would stay in the 1 to 4 to 5 year area in the bond market. In terms of equity allocations, we think the best money to be made is going to be in dividend-paying stocks, value stocks, small cap, and mid cap. We also like international. We're a little bit wary about growth. We think it's going to do fine, but it's not going to have anywhere near the year that it had in 2023.
Can I ask you, David, because, there has been a lot of attention over the past couple of months when it does come to those small and mid caps. A lot of buying happened in November, December, but how much of that can we attribute to, because again, the financial conditions ease. The expectation is that unless the Fed gets as aggressive as the market is currently pricing, even though that has pulled back a little bit, it's still relatively aggressive versus what the Fed's saying. How can we have upside for these small and mid caps if the Fed is telling us the truth?
Well, the Fed is telling what they think they're going to do, but we think that their ultimate actions are going to probably be a little bit more aggressive in terms of lowering rates. But the important thing to remember in terms of small and mid cap is they vastly underperformed in 2022. They went down more than the overall market. Last year through October, they had really not done a lot. So you just had a 2-month rally. So they're pretty inexpensive relative to large cap stocks right now. They're at about 11 to 14 times earnings. And we think that the economy is going to have a soft landing and then start to grow a little bit better late 24 into 25. And that's a good environment for small caps. So you're getting reasonable valuations, a Fed that's going to be easing, and inflation coming down. So that's a good environment. You don't want to chase them in a month like November and December. You want to buy them when they have that 4% pullback that you're going through right now.